Hi everybody, welcome to part 2 of our conventional mortgage series. I'm Courtney Lesniak and this is Alex McKenna. Now the number one thing on everyone's mind when it comes to the nitty-gritty details on a mortgage is the interest rate. What can you tell me about interest rates?
So speaking generally, interest rates change day to day, hour to hour, minute to minute, based on what's happening in the fixed income markets. When it comes to getting a mortgage, generally speaking, interest rates are going to be lower for people with higher credit scores and who are putting down larger down payment percentages.
Now we touched on this in part 1 on the series about conventional mortgages, but mortgage insurance is a popular point of confusion when it comes to conventional loans. What can you tell me about mortgage insurance?
Great thing about upfront mortgage insurance, unlike some other loan programs, FHA, VA, and USDA each have their specific flavor of mortgage insurance. Conventional mortgages do not have any mortgage insurance that's charged upfront. So that is fantastic. There's going to be no confusion about, hey, I'm buying a house for this amount, I'm putting down X amount. Your purchase price minus your down payment is your loan amount. There's going to be no confusion there. So it's a great thing about conventional mortgages.
Okay, good to know that a conventional mortgage does not have the upfront mortgage insurance. But what about a monthly mortgage insurance?
Monthly mortgage insurance tends to be a pretty big point of confusion with a lot of people when they think about a conventional mortgage. Like I said in part 1 on conventional mortgages, there's a little bit of confusion about needing 20% down to qualify, and that's just not the case. So when you're going to get a conventional mortgage, if you put less than 20% down, you will be charged monthly mortgage insurance. It varies based on everybody's situation, but it generally ranges from about 0.40% to about 1.1%, I'd say on the highest end. You will get to stop paying your monthly mortgage insurance when you reach 22% equity in your home. And you can avoid mortgage insurance altogether if you put 20% down. And that's probably where people are getting confused. But that's a great thing about conventional mortgages that a lot of other loan programs don't have, is that monthly mortgage insurance falls off after a certain amount of time.
So wow, that was a lot of numbers, Alex. Can you maybe walk us through another example?
Definitely. So we're going to take a hypothetical home buyer. We'll name him Jim Smith. He's going to be buying a house for $300,000. He's going to put $10,000 down, which gives us a loan amount of $290,000. And let's say his monthly mortgage insurance premium is going to be 0.50%. So first thing we're going to want to do is calculate exactly how much mortgage insurance he's going to be paying monthly. So we're going to take that $290,000 loan amount. We're going to take 0.5% of that, which is $1,450, and then we're going to divide that by 12 because he's going to be paying it monthly. He doesn't pay it once per year, so let's split it out into monthly. So that's going to result in a monthly payment of $120.83 per month. Now, the next thing we're going to want to find out is when it falls off. We're always talking about how great that is that a conventional mortgage does that. So at what point is his monthly payment going to drop by $120? So we're going to take the $300,000 purchase price and we're going to multiply that by 0.78. So that's 100% minus 22%. So we're going to take 78% of that purchase price. And that is going to give us $234,000. So in this situation, Jim is going to pay $120.83 until the balance on his mortgage is $234,000, at which point his monthly payment is going to drop.
Can you tell us a little more about how somebody could customize their conventional mortgage to best suit their life?
So a conventional mortgage is going to come in a variety of different term lengths, ranging on the low end of 10 years to the high end of 30 years. So when you're going to get a conventional mortgage, we're going to be looking at things like your debt to income ratios based on the term length of your mortgage. But a really great strategy that I like to talk about with people is when you get a 30-year mortgage, and then when you have it for 15 years, you can refinance at a 15-year mortgage and keep the exact same payoff date. Now, that's advantageous because a 30-year mortgage and a 15-year mortgage have a difference in interest rate, normally around 0.5%. So you can save a significant amount of money over the final 15 years of your mortgage by getting a 15-year mortgage rate that suits your new 15-year payoff date.
So what are some other things that might be paid for during the mortgage process, and what are they for?
It truly takes a village to help somebody buy a home. And with any loan program, there are going to be a variety of people working behind the scenes to help you buy your house. So for a conventional mortgage, it's not going to be a whole lot different from any of the other loan programs, but we're really going to be focusing on three things. One, the lender's team. So that's going to be processing underwriting fees that are normally a fixed rate that are just charged as a part of the origination fees. We're going to have the appraisal. That's going to be done by the certified appraiser. That's usually a fixed cost depending on the state that you live in. And the appraiser is going to go out and compare the house you're buying to other houses near it and determine what the value of the house you're buying is, and make sure there aren't any repairs that need to be made or anything like that. And then the last group of people that we're going to talk about is going to be the title agent and their team, and they're going to be making sure that the house you're buying is the seller's to sell. They're going to be doing a variety of different searches, make sure there aren't any liens on the property, and make sure there aren't going to be any arguments over the property line after you've lived in your house for 3 or 4 years. So they're going to be helping you out that way.
Thank you, Alex, for all of that information, and make sure you guys check out our third installment video for conventional mortgages.